Welcome, I'm Catherine Magaña here with Greg Carroll, Steve Wolff, and Vince Stefano, where we're here to provide you insights on the markets and planning and some other ideas. And so here we are, today is October 23rd, and we're still in the shutdown of the government. Actually, today is day 23. Looks like the Senate failed to vote yesterday. It was the 12th time that they voted, and looks like we're still in a government shutdown. One of the other things that has happened over the last week, which probably Vince will talk about, is there's mixed earnings right now. So there's been a lot of earnings been reported, and we still have many more to go. We also have the Fed. The Fed is meeting next week on the 28th and 29th, so we are expecting a rate cut. I think that's probably been priced in already, but it's looking at it's a 98.9% chance of a rate cut, so I do expect that to happen next week. But talking about rates, I was looking.
Do you have a percentage for December? Have you?
I do not have that with me.
I was just curious.
But definitely, it looks like there is going to be another rate cut between now and the end of the year. Besides next week,
we actually need to get some data out there.
Yeah.
So they can actually figure this out. Right?
That's right.
That's the shutdown that we're talking about. Looking at kind of where we're at with some interest rates, I was looking at some of the short-term fixed income, and the one-year CD has come down a little bit. It's down to 3.65. It's down about 10 basis points from last week, but the Treasuries have stayed. They've been about the same since last week. So Treasuries were a little lower. They're at 3.62.
The 10-year is down now too.
That is correct. Yes,
and that's affecting mortgage rates. So mortgage rates have. I mean, at one point we were about 7.25%. And if you look online, it looks like it's about 6%. But if you go to the direct lenders and you want to pay a point or so, it's now under 5%.
And speaking of rates, I was looking at the existing home sales rose 1.5% in September, and year over year they're up 4.1%. So we are definitely seeing people buying homes and moving. Let's see what else. There's also there's an oil price surge. So it looks like as of today, which is October 23rd, crude oil futures were up 5.88%. So we saw a lot of movement there, and that has to do with some of the sanctions against Russia. And then we also have kind of an update where we're at from last week to this week with some of our indexes. So it's interesting because it feels like the markets have been a little choppy over the last week. But the Dow Jones is up from last week to this week. So right now, we're as of yesterday's close, we're at about 9.51%. The NASDAQ is up a little bit from last week. We're at about 17.76. The S&P 500 as of October 22nd is up 13.9. And the biggest change over the last week is the Russell 2000, which is small cap stocks. It's actually down 3% over 3% from last week, and we're at 9.93. So obviously there's
it's at 9.93 for the year.
For the year to date for the Russell, but it's down from last week. Last week it was up almost 13%.
But the market seems to be kind of treading water here. Each week we're up a little, down a little. Like the as you were saying, the small cap stocks have been the big winner in the last month or two, and now they're off a little bit this time. It looks like the market, and Vince, you'll probably be talking about this.
Well, when we start getting some stretched valuations like we've been talking about, that's what typically happens in market conditions. The market kind of has a big run, a few days, and it sells off. And again, it's mostly, these big macro funds that are trading off technicals and the like. But just to touch on what Catherine said about earnings, so far the earnings look pretty good. Some companies have missed, but a lot of them have met and exceeded expectations. Even with some of the higher expectations, or the high exceeding of their earnings, there was a little bit of a sell-off in a lot of these companies, and I think a lot of that was simply because expectations were high, and now we simply have a reset. Next week, we've got a lot of big tech companies reporting starting on the Tuesday, the 28th, and what's kind of interesting is the top 10 tech companies are now worth $24.6 trillion. Think about that, $20.6 trillion.
Just a little more that's in your wallet.
That's right.
In your wallet.
In my bank account.
Which is larger than China's GDP.
But think about this. They say by the end of 2026, that number is going to go to 30 trillion.
Wow.
So, again, these big tech companies are making a tremendous amount of money. But on top of that, we're not seeing a lot of numbers, but the Atlanta Fed did come out recently and say GDP should grow at about 3.9%. So that's pretty healthy for an economic growth.
Yeah.
And those 10 companies are probably adding a significant amount to that.
Oh,
just in the
huge.
business they're
Yeah,
doing.
huge amount. And, finally, Steve has been talking about AI and the bubble. Well, finally, some of my research that I get from some of these Wall Street firms, there was something the other day that I saw, and it says AI could be the mother of all stock market bubbles. Now,
I don't remember talking about the bubble. I do remember talking about AI stocks.
I think you kind of said something.
Unless you're talking about bubble bath. And then,
maybe bubble bath. Anyway, what's kind of interesting is we've all said, over the past 3 years, the primary driver, S&P returns, has been a lot of these big cap AI companies. And they are propelling the stock prices higher and higher. Now, it's causing a little bit of issues because people are wondering, hey, how long is this going to last and all that. But there's a couple things that these AI companies are running up against. And the first is a lack of power. And they're saying that by 2028, AI will require the same amount of energy it takes to power 22% of U.S. households. So think about that. That's how much power it's going to need. And secondly, there's a circularity argument that's going around with AI. Circularity. So you like that word, don't you? Circularity.
5 syllables.
Yeah. Anyway, circularity. There's a lot. And what's kind of interesting is there's a lot of money changing hands in AI, but it's all amongst the same big tech firms. There is a huge amount of money that keeps flowing from one to the other. So if you're an investor and you're worried about AI and what could happen, a couple things you could do. Number one, call your advisor. Maybe you buy some energy companies. Maybe you buy some nuclear companies, or maybe some mining companies that help to fund some nuclear, or buy some big tech companies if there's a pullback. But should the AI bubble kind of temporarily squeak and lose some air, it should be temporary. It should be temporary only because it should reset prices and valuations. So if you think about it, all the money that these companies have spent over the last 3 years, believe me, it's not going to be wasted. It just may take a little longer for these corporate efficiencies to take shape. And what's going to happen then is you'll get more spending and you'll get higher stock and stock market prices. So again, I'm along with Steve on this AI ride. I love it. Any pullback, you keep buying. And a little on a lighter note. This is my lighter note.
I'm just gonna add some to that. But go
this
ahead.
is my lighter note. Gen Zers. 32% of Gen Zers born between 1997 and 2012 go on dates to get a free meal.
Oh, interesting.
So
really?
I didn't know. Now it didn't say. It didn't say if it was male or female getting the free meal. You got to be the judge of that. But anyway, that was on my lighter note. So.
What I was just going to say, there are also arguments about this quote AI bubble and the build out that's going on, similar to the late 90s with all the fiber optics and cables they laid on the bottom of the ocean. Everybody was going to connect everything, and we're going to have high-speed internet. And a lot of those companies building that stuff out are not around today.
Yeah, but the thing with that is
overbuilt,
we said,
it took many, many years to be able to utilize all of that capacity. So I'm just saying, there's
right, but a lot of those companies that build out all of that fiber optic stuff, nobody used it, but people are using AI left and right. I mean, it's the huge. I mean, everybody's using it.
Other than the fact that the market's gone up a lot, I don't see a lot of similarities between the internet build out and the AI build out. I really don't.
Well, I'm just saying that the capacity that is in progress and promised with the circularity thing you're talking about, and all the money, each one of them, I'm giving Vince 50. I'm going to buy $50 billion of his stuff, and you're going to buy $50 billion of Catherine's stuff, and Catherine's going to buy Steve's stuff. Is what that circularity thing is all about. And so, at some point, you gotta kind of look carefully, how all that really works,
But
and
think
the
of-
amount of money they're spending.
But
or
think about
promising to
think
spend.
about what you're buying. You're buying semiconductors, you're buying chips, you're buying processors, and you're buying software, which are all mission critical for just about every company out there. So, I agree.
And there
I
may be
understand.
chips,
I understand what you're saying, but I will disagree with that only
Well-
because I don't think the similarities are the same.
Quantum computing.
Oh, that's a different story.
Okay, that destroys everything you were just talking about. If that becomes a thing, because one of those computers can do 1,000 of these supercomputers today. Can do way less energy, way cheaper, and without all the semiconductors.
Yeah.
So I'm just saying, there's risks out there.
I
It's not
think
just
that we should be looking at the uses for the AI. I think that's going to be the next big thing. Look,
how
these
it
companies.
become more efficient using it.
Well, these companies are not cheap.
Right.
No matter how much we're going to use them. I'm not saying they won't continue to grow, because they will, but they're not cheap anymore. But the uses for AI is really what the next thing is. It's just like, okay, there was the internet, but the companies that could use that were the next ones that really made money. And if you're looking at a portfolio, at least in my opinion, again, I'm not saying that you should sell the chip companies or anything, but I would be looking for the next big wave. Because, when companies grow by 5,000% in 5 years, it's pretty hard to grow, by another 1,000% over the next 5 years. Whereas some of these other companies that are just starting to figure out, well, how do I use all this AI? And what is it for? And there are companies that are doing that. Those are the ones that you might say, hey, maybe that company can grow by 5,000%.
So there are a lot of resources. I was actually this morning at a NetForce meeting that I go to weekly. It's a group of other professionals and mastermind. And this morning we had a presentation from one of the members on Google Notebook LM, which showed us ways that things were uploaded to this site. And from that site, they created podcasts and videos and presentations and tools that you could use. And what they did was they uploaded all of our businesses and us professionally into this notebook. And then it came out with kind of like I said, a podcast or video on who we are. And it was like this artificial intelligent speaker. It was just fascinating. I was like, I was blown away of how they were able to take information from us and our websites and really articulate who we are and as a group. And so, like you said, there's a lot of uses, a lot of companies, and there's a lot of tools, and I think there's a lot more to come.
Well, this kind of goes back to the people who are really afraid that everybody's going to lose their jobs because of AI. Now, there will be job loss. There's no question about that. But there are going to be, again, the users of AI, and they're going to create companies that we don't even know what they are right now.
Right.
So it kind of goes to that argument against those people that are just terrified that AI is going to cause everybody to lose their jobs.
I mean, is there that many people terrified of that? I don't
Yes.
know. Is there?
I mean, I hear this a lot, that, oh my God, what's going to happen? Everybody's going to lose their jobs because AI can do it better. And when I hear that, my mind always goes to IBM. And I remember seeing, I don't know if it was a commercial or whatever, and you saw thousands of white shirt and tie people doing accounting at IBM, okay? And everyone thought that when the computer came in, my goodness, no one's going to have a job left, because look at all those people that are going to lose their jobs. Well, it's true that those people did lose their jobs, but the amount of new jobs that came in because of the computer dwarfed the amount of people who lost their jobs. Right. And I think that's going to happen again. But if you ask me, well, what jobs are they? I don't know yet. Okay, we don't know.
We haven't gotten there yet.
Exactly. And that's why I'm saying that I think we have to start looking at the uses of AI for the next 10 years, as to who might be big winners as far as stocks are concerned. No comment, Vince?
No, I agree. I mean, I think one of the biggest winners is going to be in healthcare. And I think biotech has been lagging for the past few years, and part of that is because interest rates were high, and it's tough because most of them are smaller cap. And but I do think that healthcare and biotech will be huge winners. And I think there's going to be a lot of software companies, like you said, we don't even know about yet. And that will be the next wave. And you had mentioned quantum computing. Well, a lot of the quantum computing stocks were up huge this morning because they said the government was going to buy or invest in some of these companies.
Rumors of that.
Well, it was interesting. That was the rumor. They spiked, and then the White House came in and said, "No, we're not going to invest in quantum computing."
Did they?
They did.
That.
So that was kind of like that was right before we walked into this podcast. There was a news squib that came out. But again, I think that for investors out there, it's oftentimes difficult to go out and try to figure out where the next big wave is going to come from. And I think that's why you have to rely on people like us to kind of, find that way and put together good portfolios that'll, capture, the new innovation that's out there.
Right.
So anyway.
And in case you're wondering about where we are with the CNN Fear and Greed Index, we're at 28 right now. So it's up slightly from last week. I think last week we were at 25, which was just at the edge of extreme fear. Now we're just in fear. Okay, but I still find that good. I don't want to see the market really high and everybody still exuberant about it. I think there are more people right now, and because markets generally climb that wall of worry. We always know that. So I don't think we're in any imminent danger of a market crash. That doesn't mean that it can't correct. I kind of hope that it does correct a little bit because there are some stocks I'd like to buy at a little cheaper price.
Right.
So as we approach here we are, the fourth quarter, just kind of some things to be thinking about. Obviously, we still have a little bit of time left of this year. So if you had some goals or things that you wanted to accomplish, it's a great time to reflect. But it's also a good time to start thinking about 2026. What are some of your financial goals for next year as well? A couple other things to consider are looking at your 401k or your retirement accounts and making sure you've maxed out your contributions. If you're in a 401k plan, you can put $23,500 away, and if you're over 50, you can put the $7,500 away as on top of that. One of the things that has come up recently is Rachel's been reviewing she looks at pay stubs, and one of the pay stubs she reviewed recently. The client this year is making a lot of money in income, and they had a lot of money going into Roth salary deferral on part of it in pre-tax. And for their particular case, it makes more sense for them to max out for the rest of this year their pre-tax. So if you want that reviewed or looked at, please reach out to us. We're happy to evaluate that. And then another thing that kind of comes up around this time is evaluating charitable giving, and I'll kind of turn it over to Greg for that.
Yeah, one of the interesting things with charitable giving, a lot of people are starting to get more used to the qualified charitable deductions from their IRAs. But another way to give for the people that are so inclined to give every year is donor advised funds. And what those are is you actually put your money into one of these funds, say through Schwab, and the money is in there, and it doesn't have to be all donated right away. You can set it up for multiple years down the road. So you can also put in highly appreciated assets instead of selling them, paying taxes, then donating the proceeds. So you actually can give a better donation and save yourself some tax money. So you can give cash, non-cash like stocks, artwork, other things that even some charities won't take. Donor advised funds take in all kinds of different assets. And there is going to be a change next year where your charitable donations are going to have to be at least 0.5% of your AGI, your adjusted gross income, before it's actually deductible. So if you made $100,000, you got to donate $500 before anything is even deductible. So you got to keep that in mind. And there's also, the standard deduction, which has gone up quite a bit over the years. You want to look at whether if you're itemizing or the standard deduction, which one's better. Maybe you can do a little strategy they call stacking, where if you're kind of right on that cusp of using that standard deduction, you could kind of front load a few years of donations in a donor advised fund, itemize this year, and then take the standard deduction maybe for the next couple of years to, kind of take a better benefit of the taxes and so forth.
So we have a client that we're looking at as well for the donor advised fund. She needs that deduction this year
Yes.
because she has a lot of income and doesn't need the money later. And then the beneficiary is right now currently charity, so she's really inclined to do a donor advised fund. And one of the reasons that she likes that option versus just donating the appreciated stock is she likes the idea that she doesn't have to do it all now. She can kind of donate over time. and spread
Exactly.
that
You don't
out.
have to decide right away. And there, another strategy that works in conjunction with this is people converting IRAs to Roth.
Yep.
When you do that, you increase your income, and maybe if you put some money in a donor advised fund, you can help reduce that tax bill a little bit. So there's a lot of different ways to use these donor advised funds. It does change a little bit next year, so maybe it's a strategy to sit down with your financial planner. And
Are they managed funds? I mean, do you manage these funds, or are they just a holding?
so if it's under $100,000, there are different like models that you put it in with Schwab. If
Oh,
it's
okay.
over
Okay.
$100,000,
With Schwab for us.
For us.
With Schwab for us,
Correct.
correct.
Could be anybody.
Could be anybody. If it's over $100,000, there is more control, more options for the advisor to help the client invest that for the longer term. So it is invested, from conservative to, more growthy, even under 100,000.
But
managed.
But I think you've made a good point. This is for people who are charitably minded,
Right.
because the money doesn't stay with you. You're just
Right.
paying less tax, and you're directing where that money can go to.
Exactly.
So if you want us, if you want us to review that for you, we are happy to look at your own financial situation. And once again, there's a lot of different planning techniques and things we can look at, tax planning as well. And so we're happy to look at this with you if you have more interest in this.
Okay. Well, that takes us through another great podcast, and let's see what happens. Halloween's coming up here. Hopefully it won't be too scary.
Well, there's something before Halloween. There's a big game tonight, Steve.
Oh,
This must have to do with
Can I
the
say
Vikings.
Skulls?
Greg being the Vikings fan.
Minnesota Viking Chargers tonight in LA. So
Yeah. Are you going to the game?
I will be going.
And if
With some
anybody
family.
cared, earlier this week, it was the 38-year anniversary of the 1987 market crash.
oh,
Wow.
interesting.
38 years ago.
Wow.
Now, a lot of people weren't even born. I don't think you, Catherine.
Thank you. That would be a nice compliment. But,
I have to tell you, that was the second year I was in this business. I started in 1986. And of course, at that point, I didn't have a lot of clients. But I remember the person in our office who had the most amount of clients, I thought he was going to kill himself because, he was saying his career is over and his clients are all losing money and huge. I mean, we were down by something like
7%.
I thought it was
20-something
22
percent.
that
Yeah,
day.
it was
On
one
that day?
Yeah,
One
but
day,
think about where
22.
the Dow was. It's not like it's
Yeah.
at 48,000 where
Right.
it is today. It was what?
Right.
4,000?
So what would 22% be of 40-something thousand? I mean, that would be, 10,000 points in a day, something like that? I don't know.
Yeah, that'd be
That,
bad.
is- that would scare you.
Yeah, that
But
would-
anyway,
It would be a lot.
I remember taking, and you remember the Quotrons. Remember Quotrons?
I do.
I took a picture at the end of the day of my Quotron. And
How
unfortunately,
negative it was?
unfortunately, I lost the picture.
And all those green numbers.
Yeah,
Exactly.
I lost the picture.
And he had floppy disks, too.
I had a lot of fun.
What kind of camera were you using? A Kodak or
I don't remember.
you didn't have a cell phone?
I don't remember. It was probably one of the Kodak Instamatic, and I brought it to Rite Aid to have the photos.
They lost the.
I don't know. I
negatives
don't know
there.
what happened.
And had some thrifty ice cream while you were
there
there.
you go.
I don't know. This was,
All right.
No, this was New York. It was Dwayne Reed.
But yeah, I remember that as if it was yesterday. And literally, I mean, there was depression. And on top of that, because it didn't have, we weren't really computerized at that time, the market was closed for 2 or 3 days. I don't remember the exact amount because it took them that long to manually figure out all the orders, the buys and the sells. It was incredible how bad that was in one day.
Oh, yeah.
And then to top it off, a month later, we had made it all back up.
Wow.
So go figure. Anyway, that should wrap it up for this week. We will see you again next week. And until then, happy investing.
Thank you.
Bye.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.